What up, y'all? In this video, I'm going to be breaking down a strategy you could have used today to have caught 40 points trading the S&P 500. This is one of the most consistent strategies I've ever used in my 4 years of trading in the markets, right? And one thing about the markets is the objective is to find a strategy that's consistent and repeatable and that you can define your risk consistently every single time. And that's what the strategy provides. So I'm going to break down the strategy and how it applied today in the market. But before I get into that, one thing I do want to talk about that's really important to me over this last year as I've, been trading. One thing that I have come to realize is no matter how much money you make, no matter how successful you get, no matter how rich you get, no matter how well you do at trading, all of it is temporary, right? All of it is temporary, and all of it's ultimately, it can't be brought with you, right? Whenever you die. And we're all going to have to give an account of what we did with what we were given whenever the Lord Jesus Christ does return to earth, which he will. And at that time, the only thing that's going to matter is, did you give your life to Christ? Did you believe in him? And did you actually obey him? Right. And if you did that, the only thing after that that's going to matter is, what did you do with what he gave you? Right. And so one of the things I had to learn this year is this idea of contentment and being content with what God has given us, and specifically not being so focused on trying to get more. Not that it's bad to get more, but when our heart is so focused on getting more and more, a lot of times we don't actually get to appreciate what the Lord has given us. And that doesn't allow us to live in the freedom that comes right from genuinely having a relationship with the Lord and being content, right? And not because for a lot of y'all are so focused on being successful at trading that you feel, oh, my life is not complete until I'm making X amount of money in trade. And don't just look, I've been there, when you feel like, okay, until I'm making this amount of money, I'm not going to be happy. I'm not going to be satisfied. And that is not how God wants you to live. That is not how Jesus wants you to live. You have to be content, right? Paul talked about this in his letter to Timothy, right? And I'll show you really quickly before I get into the video. We're going to get into the video. But in this letter to Timothy, Paul says that godliness with contentment is great gain, right? For we brought nothing into the world and we can take nothing out of it. But if we have food and clothing, we will be content with that. Those who want to get rich fall into temptation and a trap, and into many foolish and harmful desires that plunge people into ruin and destruction. For the love of money is a root of all kinds of evil. Some people eager for money have wandered from the faith and pierced themselves with many griefs, right? So what is this actually saying? This is not saying that it's money in and of itself is bad, right? What is bad is the love of money, right? Most of the sin and strife and heartache and dysfunction in this world comes from people loving money so much, right? A majority of the things that are wrong in this world come from people's love of money, which is a sin, right? Because the only thing that we should put nothing above our love for God, right? Our love for God has to be the number one thing in our life. If you love money, then you're going to inevitably sin, and it's going to cause you to stray away from being in good relationship with the Lord, right? And so this is why this idea of contentment is so important. Godliness and contentment is a great gain. Having a godly life and being content with what the Lord has given you, right? Where you're at in your journey. If you have a job right now to be able to even fund this trading venture that you're trying to do, you should be content there, right? It doesn't mean you can't strive for more, but learn to be content with where you are, right? It will make your trading much more peaceful, and it will make you live the way that the Lord actually is calling and wants you to live, right? So that's the word I want to share with y'all. So I'm praying that, everybody that's listening and watching, y'all get that message. So now let's get into the video. So today, first of all, I'm going to break down the strategy really quickly. And I know, for a lot of y'all don't got, long attention span, so y'all might already be clocked out. But that's fine. The people that this is for, y'all are still here. So What the most important thing about the strategy is identifying where your fair value gaps and imbalances are, right? Your buy side imbalance, sell side inefficiencies, which are your, bullish fair value gaps, identifying where those are, right? We have one there on the 4 hour, and then we have one here on the 4 hour as well, right? As far as time frames go, we only want to use the 4 hour and the 15-minute time frame. That's the only time frame we're concerned about. We're not concerned about what's happening on the 5 minute, on the 1 minute, on the daily, or whatever. It's fine to look at that, but as far as the strategy is concerned, this is the only time frame that matters for this particular strategy, right? So we want to identify where are our 4 hour fair value gaps every single time, right? You need to be aware of every single one on your chart around where price is currently trading. So you can see we had three BISIs, right? 4 hour BISIs that formed. And we also had this 4 hour CIVI that the market had been trading into, right? So those are the imbalances or fair value gaps that you need to be aware of going into trading today. So that being said, the other most important thing that we need to be aware of is it comes on the 15-minute time frame. But before I do that, I'm going to break down what we're actually going to be looking for. So once we have identified our 4 hour fair value gaps, so let's say in this case, right, we have this 4 hour fair value gap right here. Let's just say hypothetically, right, and price now is going to be trading lower, right, into our gap, right? Price is trading lower, and then we do trade into our gap. And let's say there's some sort of liquidity that's resting here, right? Sell side liquidity that's resting here that the market trades into, right? And so once the market trades into that, now what we're looking for essentially is for the market to sweep that liquidity inside of this fair value gap and then form a change of state of delivery on the lower time frame, on the 15-minute time frame. What is a change of state of delivery? That is essentially where the series of candles that swept that liquidity gets closed over, right? We close over that series of candles that swept the liquidity, that opening price of that series of candles, right? Once we close over that, that is a change in state of delivery, right? So that's what we want to be looking for, a change in state of delivery on that lower time frame. And now once we get that change in state of delivery, now all we're doing is waiting for the retest of this level. And then we're targeting some sort of opposing liquidity or a standard deviation level, which I'll show you here in a second. So that is essentially what you wanted to be looking for with this strategy every single time. 4 hour fair value gap, sweep of liquidity, change in state of delivery, retest, targeting opposing liquidity or -1 standard deviation, which I'll show you in a second, right? So we do that on the 15-minute time frame. So now if we drop down right into our 15-minute time frame, I have highlighted here these colors you can see are the different sessions. Green I have set to be London session, right? This is Asia session, right? And so you can kind of see where the different liquidity pools rest, because generally session highs are good areas to look for liquidity pools for sell side and buy side liquidity. So as you can see, going into that New York session at 6 a.m. session, you can see we had sell side liquidity resting here inside of that 4 hour inside of this 4 hour fair value gap that we identified earlier, right? And then we also had, this London session liquidity that was also resting here as well. So you can see from here that price does, right, trade lower going into that New York session. We trade lower and we sweep both of these liquidities, right? We sweep London and we sweep Asia, boom. And then price does come higher. And then from here now, what would a change in state of delivery look like? At this point, a change in state of delivery, we'd be looking for the series of down close candles that swept that liquidity, right? Where is that? It's these candles, right? These 3 candles are the series of down close candles that swept that liquidity in this 4 hour BISI, right? And since we're in this 4 hour BISI, we're looking for longs, right? So we're going to look for the market to have a change of state of delivery on this level, right? So boom, the market, we had some data come out at 7:30 Central, 8:30 Eastern. So the market does come hit this level and you can see we respect it, right? Is that a coincidence that the market respects that like that? No, it's algorithmic, right? So boom, the market does, we get this close here. So now that's officially the change of state of delivery at 8:45 going into 9 a.m. This new hour, we get the change of state of delivery, right? And going into that New York open, we do come back, right? Retrace here, and the market does come here, right? And then we come close right going into that New York open at 9:30 a.m. So boom, essentially now what we're looking for is a retest, right? You could have entered on this initial retest totally fine. And what you would do is you would enter there, putting your stop loss down here, right? Your stop loss would be down here. And now we're going to be looking to target -1 standard deviation, which ultimately is going to be from the low, right? From the low to the high of the candle that was that swept that liquidity. That's how we draw our standard deviation levels, right? So this -1 standard deviation is where we would be targeting if we enter on this retest, right? So on this retest, having our level here, you can see at 9:30 a.m., I'm going to put this limit here. The market does come back as soon as the market opens. Boom, we come back and we retest this level perfectly. It didn't fill me on here, so I have to drop down to a lower time frame just to show y'all what this would have actually looked like. I don't know why Market Replay does this, but I'm just going to buy it here and show y'all what this actually would look like. Did it buy? I think it did. Right? So we'd buy there, getting in on that retest, boom, here. And you can see the market immediately rips up off of that retest at 9:30 a.m., right? We were immediately rip up looking to target this -1 standard deviation. So you can see that from here, 6803 to 6823, that's about 20 points, right? That you could have made here. Boom. You can see at 9:45, what do? Look at this price. What is the high here? What is the high here? At 9:45, the high of this candle, it is 68.2375. What is this level? 68.2375. Is that a coincidence? No, this market is algorithmic. It's not a coincidence. So boom, you could have entered here and sold there at -1 standard deviation. Like I said, targeting -1 and made 20 points there, right? Now, looking again for another potential entry here, right? And this is totally subjective. You don't have to re-enter. You could have took that trade and been done, right, off the retest, and then entered, took to -1, been done. Now, if you're still, looking for something, you come back down here and look for another potential entry. What you can see, and there's a bunch of different ways you can play this. What I like to do sometimes is if there's another entry, in order to give me confirmation before just entering blindly, because the first retest, sure, no problem. I don't have an issue entering blindly, especially if we haven't hit -1. But since we've hit -1 now, this could theoretically just sell off. Like after all, we're in a 4-hour fair value gap. So in order to get confirmation, what I like to do sometimes is drop down to the 1 minute and look for another potential change in state of delivery on the 1 minute time frame, right? Because ICT time frame alignment, you use a higher time frame PD array with a lower time frame entry mechanism, right? So in this case, we're using the 4-hour PD array, which is this BISI, this 4-hour BISI that we identified here, right? This is our 4-hour BISI. That's our higher time frame PD array with our 15-minute entry mechanism, which is the change of state. Now, the other ICT time frame alignment is the 15-minute and the 1 minute, right? The 15-minute and the 1 minute is the same thing. We'll look for our 15-minute PD array is going to be this order block, right? This change of state of delivery, that's a PD array. And we're going to look for our change of state of delivery, right? That's the ICT time frame alignment, 15-minute, 1 minute. For our 15-minute, you could also do daily 1 hour. You could do 1 hour, 5 minute, right? But I prefer, you could even do 4-hour weekly, right? But my favorite is 4-hour, 15-minute. And then if I want extra confirmation, I might drop down sometimes to a 15-minute or 1 minute and then look for a change of state there. So you can see we have all this liquidity resting here. So, right, we're looking for a change of state of delivery. So we need to see a sweep, which you can see the market does come down, sweep this liquidity here. Right, we sweep all this liquidity here, which is pretty much sell side liquidity. Now, where would our change of state be? Right, coming out of this 15-minute order block, this would be our change of state, right? This level. right? So theoretically, you could wait for the market to come back and close above that level. You can see, which we do here, boom, wait for a retest, which the market does, come back here. You would enter here, right? Your stop loss would be here, right? So your entry would look something like this. Entry here, stop loss here, targeting -1 initially, right? And then boom, if we get through that, you could even target -2 for about 30 points and a 2.3 risk to reward ratio. So you can see the market does come back, right? We trade lower into this, right? And then boom, we get another change in state here, right? You get another change in state here, because what's this? A sweep of liquidity. This low got swept, right? This low here was swept. This is a change of state. You can see the market respecting that level. We come back down, right? And boom, the market does come out of this and we spool higher, right? So you can see this stop loss would have never been hit, right? If you enter here, the stop loss would have never been hit. All right, the market does come back, retest this level again. You can see we're respecting it algorithmically, right? Closing above the price once we got back above it. All right, and the market does from here just spool higher. Let me move that. The market does just spool higher. And if we go back to our 15-minute, because again, that was just for entry mechanism. Now we want to focus on the 15, right? We do get to that -1 there, right? So you could have sold there again, right? And then from here, now, let's say you even missed this entry down here. Now, if we get to -1 and we close above the -1, it's a safe bet that the market is probably going to go look to take out -2, right? So from here, you could have even looked to re-enter here on the retest after this close, right? Let's say you missed the entry down here off of this. You could have looked to enter here on this close, 68.24, targeting 68.42, right? So you can see, what does the market do? Boom, perfect retest. What is that low on this candle? 68.2375. A perfect retest of that level, looking to target -2 here, right? So a perfect retest. So there was multiple opportunities to enter using this strategy today, and even looking for continuation, right? And that's the best thing about this strategy is generally the market loves to gravitate towards those standard deviation levels like a magnet, right? So you need to know how to properly draw your standard deviations. Remember, it's from, if you're looking on the bullish scenario, it's from the high to the low, right? Not the opening price. It's from the high of that series of down close candles to the low of the series, or to the low that was created, that was put in, right? That form ultimately came out of the, that formed the change of state of delivery, right? That's how you draw your manipulation leg. This is your manipulation leg. This is what manipulated. Now we can essentially double that leg. That gives us our -1, -2, right? And then it can even go -4, you know, if the market does want to draw into there. Generally, I just focus on -1 and -2, because from there, usually, you know, you'd be up a good amount and I don't need to just sit on the charts all day. But you can see there were multiple entry mechanisms here, a lot of technically sound entries, very good defined risks. As you can see, we had this change in state here on the 1 minute that helped us give us confirmation on when to enter this, right? Because it wouldn't have been good to just enter this blindly. This could have just easily kept selling off, right? Because again, we still had liquidity down here too. So wait for confirmation if you are going to play on that 1 minute for that second entry. But that initial entry is generally safe. That initial retest at 9:30, this one is generally safe to enter, right? That doesn't mean it's always going to go to -1, but it's generally safe to enter. So that is how you could have caught actually well over 40 points, you know, depending on if you entered this only one time, because you could have entered at 9:30 and said, oh, I'm going to hold to -2. That's fine. I personally wouldn't do that if we had ripped up 20 points. I'm not letting this go red against me if I entered here down here at 9:30. That's foolish to me. But, you know, if that's what you want to do, then that's what you want to do. So that's how I would have played this today. I think this was an A plus setup. This was probably this was one of the cleaner price action days, though. When you understand markets and kind of when you start looking at the markets like this, you generally start to see a lot more cleaner price action because you're looking for certain things, right? And you know when to stay out or stay in, right? Because I know until the market got above this level, there was nothing for me to be interested in, right? So all this was nonsense, right? Once we get above here, cool. Now I know I can get in here, define my risk below this low. And that's another thing. If I'm entering here, my risk should be defined at this low. So because that's a pretty big stop loss, right? From 68.03 to 67.86, that's a 17-point stop loss, right? So I want to make sure that I'm sizing accordingly based on that stop loss. If my stop loss is 17 points, I should size accordingly. If my stop loss is 5 points, I should size accordingly. If my stop loss is 30 points, I should size accordingly. That's why this strategy is so powerful, because it allows you to size accordingly based on the stop loss and define your risk ahead of time, right? So I knew right after, once the market was trading up here, I knew, okay, if we get up here, I can define my risk as this. So I know what position size I need to enter. I know how many contracts I need to enter. I'm not guessing, right? If it's a tight stop loss, I know I can probably size up on this trade. If it's a huge stop loss, I know I probably need to size down. So that's why I love this strategy. It's so consistent. Go back and back test it. You know, I'm going to do a back testing video for the month of November here in a minute, or here soon. And, you know, I'll be able to show you how effective this strategy actually is. So anyways, this video is getting too long. I know a lot of y'all ain't even watching no more, but those that are, I rock with y'all. So I rock with all y'all, but you know, I appreciate y'all for, you know, tapping in with me. So anyways, that's all I got for y'all in this one. I will see y'all in the next one.